Welcome back. You're watching Your World at 10 on CNBC TV 18. Now, remember, in a statement yesterday, the World Bank said that it has cut its 2009 growth forecast for most economies and that the global economic picture remains very gloomy. Now, this comes despite signs of a revival in the U.S. housing market and U.S. consumer confidence. So are the green shoots that economists are talking about for real? Well, to answer that, we have a leading economist on tonight's show, Robert Shiller, Professor of Economics at Yale. Well, Professor Shiller, thank you very much for joining us on Your World at 10 tonight. Let me first start by asking you for your prognosis of where we stand in the global economy and, of course, America leading that picture.
Well, it has looked bad until around March, and it seems like confidence is up globally because every stock market in the world, every major stock market, kind of bottomed out in March and soared. And that's true of India, too. U.S., India, lots of countries. But I don't know if it's going to hold. That's confidence, but it's not economic activity yet.
Professor, then reconcile these many comments that are coming in from across the world. For instance, when the World Bank cut its forecast for the year 2009, the World Bank chief economist is quoted as saying that governments should stick to spending more to reignite growth because economies are still looking weak across the world. Meanwhile, the head of the ECB, the European Central Bank, Jean-Claude Trichet, says there is a moment when you can't spend any more and you can't accumulate any more debt, and I think we're at that moment. So how do you reconcile the fact that you're not seeing a resurgence in economic activity, but you are seeing one in confidence? There is the chief economist of the World Bank saying government should spend more. There is the head of the ECB saying there is no more room for any more debt for any government to take on. What do we do from here onwards?
Right. Well, this is a difficult judgment call. We're in a difficult situation with the world recession being as strong as it is. What should we do? Well, in my judgment, I think that the stimulus package should be generally increased because we are still in a very weak situation. And we don't, this confidence burst that we've seen is not clearly sustainable because we've seen this kind of thing happen many times before. And there's a burst of enthusiasm. It's kind of supported by a market boom, but then it doesn't last. And, it seems to me that the government's really haven't done enough generally around the world because the contraction is really big and more is coming. Real estate prices are still falling. I think the stock market may be correcting down. This confidence may not last and we may still be in trouble.
Do you see governments, especially like, for instance, in the United States, the deficit now is touching historic proportions. Is there room for governments to borrow more, to print more? And what if the problem, I know it may be a problem that's still a little distant in the future, but the problem of inflation?
Right. Well, these are, in the U.S., the national debt as a fraction of GDP is well under 1. If you look at Japan, Japan is the obvious comparison because Japan had 15 years of bad economy after their bubbles in the stock market and the housing market burst. Japan moved its deficit up, government debt as a fraction of GDP closer to 2 times GDP. So, we've got a long way to go before we're up in the Japanese level. On the other hand, you note that government bond yields have been going up in the U.S. recently, and that may reflect market fears of inflation in the future, or just market souring on the idea of investing in U.S. government debt.
That's right, sir. So how big a fear is inflation according to you? Because you are recommending on the one hand that governments should continue to spend even in the United States.
Well, I kind of think that inflation scares at this point in history are not going to be dominant factors because, hey, we're in deflation. In the U.S., the consumer price index is down several percent over a year ago. Now, you could say that's largely because of the drop in oil prices over a year ago, but I think it does show that we're far away from an inflationary environment now. I think if we're thinking about inflation, we're talking about long-term bonds, that whether it might break out in some time in 5 or 10 years. I think for the immediate purpose of government stimulus, countries have to be on the side of emphasizing stimulus and not worrying too much about this debt problem. I think that, I know the interest rates are up a little bit, but I wouldn't worry. I think we have to push forward and stimulate the economy.
It's interesting you say that, sir, because media reports say that, as the Fed meets today and tomorrow, it will be discussing exit strategies to unwind stimulus efforts. And I'm guessing that you don't agree that this is any time to be even thinking about it, leave alone action.
Well, I think we do have to think about exit strategies. Absolutely. In the U.S., the government, the Federal Reserve Bank, has doubled its balance sheet in just like a year's time, and they've massively increased bank reserves, and the money supply has gone up, not as much, but it's gone up quite a bit. All these things are potentially inflationary, so it's very fitting that they talk about exit strategy. But but it is, I think, down the road a ways. We have to have a plan in place, and I think there's lots of other things that have to be talked about. The real fact is that we are in a global recession that we haven't seen since the 1930s. We're in a serious economic condition, and let's not, that's what aborted the recovery after in the Great Depression, is that people were afraid of the government deficit, and believe it or not, people were afraid of inflation during the Great Depression, and so the government didn't stimulate as much as it should have, and they stayed in the Depression for 10 years. We don't want to make that mistake again.
Professor Shiller, when you talk of more stimuli or more stimulus packages, what is it that you'd like to see, let's say, in the United States of America? More of what they already did in that $800 billion stimulus bill? Or is it a different kind of effort that you think will be needed to yield better results? Well,
I know it's very complicated to actually do a stimulus bill. I remember Larry Summers, who is head of the National Economic Council in the U.S., he made a quip that he said, it's harder to spend $300 billion than you'd think. Sounds easy to me, but I guess, when you're trying to think of government programs, expenditure programs that are immediate, that you can launch immediately, and that you can shut down when you feel that the time is no longer ripe for stimulus, it is hard. And so I sympathize with these people. You could end up misspending the money. And so I'm not entirely confident that I would do a good job of deciding on these things either. I think, though, what I'm looking at, though, is that we are in trouble. The economy may not be recovering, and we certainly have to try to expand the stimulus package.
So just like many CEOs that we speak to across the world say that these green shoots aren't for real as yet, you believe as well that these green shoots aren't for real. How long, if there is a way to estimate, do you think it will take for both the American economy and therefore the global economy, which is so intrinsically linked to the American economy, to be able to recover and for those green shoots to actually be there for real?
I think this green shoots metaphor is overdone. That suggests, what is green shoot? That means spring is coming, right? The seasons are changing. That's not what we're seeing. What we're seeing is something potentially much more ephemeral. We are seeing confidence grow. Now that's what we need. In my new book with George Akerlof called Animal Spirits, we argue that confidence is what drives the world's economies. It's not recognized enough by economists. So it's certainly good news that confidence seems to be growing. But on the other hand, confidence is not like spring. It's not something that is just going to go with the predictability of the seasons. It's something that can come and go. It's ephemeral. It's something that we have to, the governments of the world have to follow up this surge of confidence with real actions that will reinforce the impression that the economy is coming back.
And, what dent in confidence do you expect from the kind of price hikes we're seeing in crude? Last week it had gone all the way up to $72 a barrel. It has come off in trade a little bit this week, but it seems that crude is back on the incline.
Right, and that is oil prices have been a major factor in global recessions in the past. So that's a concern. And then there's the interest rate increase concern. That But who knows what else will come later. I'm thinking of falling real estate prices, at least in the U.S., as a factor that will continue to worsen balance sheets. And more people will be underwater in the sense that their homes are worth less than their debts. They are wiped out. And when you're wiped out, when you have negative assets, it's going to put a dent in your confidence. You're not going to spend money. You're going to pull back. And that general atmosphere of pulling back is the basic problem, which is very difficult to deal with.
All right, Professor Shiller, we'll leave it there. Thank you very much for joining us. Thank you for your perspective and for your time on Your World at 10. I'm going to end this conversation with this cartoon strip that I saw in one of the papers this morning. And while it talks about the U.S. economy, it fits in perfectly as a description for the global economy as well. It says that the U.S. is on a yo-yo diet, and that's exactly how it feels. No cash last year, lots of cash and confidence suddenly this year, and then things seem to be sort of tapering off as gloomier forecasts come in this week. While we'll end it on a comic strip, time to take a quick break on Your World at 10.